Hey everybody, Scott Cole here, and we're going to follow up our last video that we completed where we were testing turtle system number 1. So today we're going to go ahead and test turtle system number 2, which is basically buying and selling 55-day highs and lows, and then exiting the trade at 20-day highs and lows. So and of course we still have the 2N hard stop loss, and there you go, and all the other money management algorithm that goes with it. So first we've got Big Liquid 2 here. We're gonna go ahead and edit this from Turtle System 1. We're gonna put in Turtle System 2. As you can see, I've got many variations of the turtle system. And so there's turtle number 2. We're going to use a $25 commission, 50 for slippage. And here's all the markets we're going to test again. And now we're going to run this. And this step, if you recall, we're just testing one contract at a time. And then the next step, the money management algorithm will kick in. So we're going to go ahead and run this. And there's our main variable, the 55-day high low and the 20, and we just ignore that B1. And our stop and our money management algorithm is based on this variable here. So we'll test the individual contracts going back to 1979, and you can see it's running. The program is running, as you can see down the bottom. So I'm going to go ahead and pause the video, and we'll return once we're getting close to completing that process, and then we'll see those results for testing one contract at a time. Okay, so this first step in our test is just about complete, as you can see, and we're testing a total of 31 markets. And we'll be getting the results up here momentarily for just testing one contract at a time, and it'll be building that report. And the interesting thing is that you'll be able to actually see how each market, each individual market performs. So if I wanted to see how natural gas did with this system, then we can see the results testing one contract at a time. I think I have it set up for the mini size contract as well. So we had 118 trades, 42% winners, and all that stuff. Keep in mind, these are just simulated results, so this is not actual trading. Okay, so now we're going to go to step 2, which is to test this system with the risk management strategy in place. And this is the most important step when you're testing a trading strategy, because you're not going to trade an equal number of contracts in natural gas as you would in the euro dollar, because the contract sizes are different and the volatility is different. So this is an important key in trading a diversified trend following approach. So we need to edit this. We don't need to do anything actually. So we're going to go ahead and run this. And again, we're only going to risk 0.5% of our equity per trade. We'll go ahead and go back to the early 80s in our test, and this is going to take a few minutes. So at the bottom you can see it's preparing the markets to run, and now it's going ahead into that test. So I'm going to go ahead and pause the video, and we'll be back once this test is just about complete, and then we'll have a look at the results. Okay, so we're just about done with our test, as we can see at the bottom of the screen, and it's calculating the results. And we'll take a gander here in a moment. And if you don't have this software program, it's Trader Studio, and I highly recommend visiting that site, traderstudio.com. If you're going to be trading your own systems and such, this is really a great program. So here's our summary. nearly 14 million in profits going back then. Let's just check out how we did on a yearly basis. As you can see, the 80s were really good with this particular strategy. Our first down year was really 1996, but those down years started to become more frequent. Now, it wasn't surprising that 2008 was a solid year based on this particular strategy, but in any event, really over the last 10 or 15 years, we had some good years here in the early 2000s, but the last 10 years or so, this system has struggled mightily. So this is a reason why we keep on hearing about the death of trend following and all this stuff, because a lot of the breakout style traders have struggled. Now here's some of the more important information. Your compound annual growth rate was 9.25%, and you have a maximum drawdown of 40%. So that's, generally speaking, in the world of investment managers, not quite what they're looking for. They're willing to accept a drawdown that's maybe double what the compound annual growth rate is, as far as the worst drawdown goes. But a drawdown of this magnitude is probably not going to be overly acceptable. And in all honesty, this is actually similar to some of the performance we've seen as far as long-term results among some CTAs. Their compound annual growth rate has been in decline because the last 5 years have been so difficult for many trend followers, and that's what's really kind of skewed their results over the last few years towards not being the most attractive style of trading. So ultimately, this is clearly a system that's worth looking into as far as your trend following ideas go, and it's recommended you pick up a program such as this to go ahead and test out some more ideas similar to these turtle systems. But that's turtle system number 2, and in our next video in this series we're going to cover turtle 3, which is a combination of turtle systems 1 and 2. And for more information, if you're not visiting us, watching this video on our website, come and see us at thefuturestradingacademy.com.